Joining me now for a closer look at what's playing itself out in that market scene is independent analyst Jimmy Moyaha. Jimmy, a pleasure. Happy Monday.
Happy Monday, Nolu. Thanks for having me.
All right, brand new week. Last week was volatile. Let's talk about what we are anticipating to drive markets this week.
I think there's mostly going to be US data that drives the markets. We know that a lot of sentiment sits in what's been happening on the US side with that inflation conversation and how we see the Fed handling interest rate cuts and the modeling that's happened around that. We spoke about that at length last time, so let's avoid doing that this time. But what we do have is personal consumption expenditure out of the US, which is a preferred measure of inflation that the US Fed uses. So that's coming out this week. We've got earnings coming out from a number of companies, including some of the, I think 3 or 4 of the Magnificent Seven are reporting earnings this week. We've got guys like Chevron, ExxonMobil, Visa, Tesla, all reporting earnings this week. So I think that's going to create the volatility this week because a lot of the earnings expectations are going to come through, and whether or not earnings targets were met and what we thought might be happening would give us a clearer picture of what's going on. I mean, in the likes of Tesla, we are now closer to the 100 Rand level than we are back to the 300 Rand level in that case. So it'll be interesting to see what's happening there, especially with the compensation conversation that's happening around Elon Musk at the moment in that respect. So I think earnings are going to drive a lot of the volatility this week. We're seeing that the tensions in the Middle East sort of still have an impact on the oil price, but those seem to hopefully be subsiding at this stage. And if we can get good PCE numbers as well as good earnings numbers, you might see a slightly different picture at the end of the week than the start of the week.
I must ask you actually a little bit more about Tesla as well. I think out of all of the Magnificent Seven companies, this is the one that's probably experiencing quite a bit of, the volatility. I've seen lots of news out there about them cutting the prices of their products. That can't be good for business. But also, the story, the investment story, moving away from Tesla being a vehicle manufacturer to being a software business. Jimmy, is it in transition? Is this a company that is going through a bit of a transition?
So I think if you're going to be first mover in a market, it always has this kind of effect, right? So you think about the EV market, and Tesla's name's always been mentioned at the forefront of that space. And we're seeing that even though there is this conscious transition towards cleaner vehicles and the like, it's happening slower than what we thought it might. You're seeing that there's still a demand for oil, there's still a demand for fossil fuels. Renewables haven't had the uptick that we thought that they would once things like inflation and that started coming under control. We saw them as a big activist drive during the pandemic and around that time, but we've since seen that the demand and the reality around the realities in the market are presenting themselves quite differently. And if you look at Tesla's competitors as well, I mean, the likes of BYD and NIO in China, companies that are coming into the Chinese market and saying, we are willing to charge less than Tesla for the same product. So now Tesla has to relook at that strategy. Couple that with the fact that Tesla is now looking at job cuts. Now, job cuts anywhere between, I think, up to 10% of the workforce is at risk at this stage. And there's still that huge compensation package that I mentioned around Elon Musk's compensation that the courts are going to rule on there as well. And hopefully, well, the Tesla board is going to vote on there, rather. And alongside that, it's numbers, right? Are you going to hit your numbers? Are you going to hit your deliveries? Number of deliveries, we saw that becomes an important figure when you're looking at something like a vehicle manufacturing company, even if you're transitioning to other things like software and all of that. You came into the market as this is what we do kind of thing. So if that transition is to happen and the market is to say, okay, but are you changing what the company's strategic direction is, or are you adding this software component in addition to what you normally do? I mean, at 145 Rand a share, it's anywhere between here and 100 Rand that the share could bounce, depending on the data that comes out, depending on tomorrow's earnings numbers. So we'll have to keep an eye for that.
Very interesting indeed. I also want to touch on oil. The oil price there, around $86 a barrel. I'm actually quite surprised, Jimmy. Last week, towards the end of the week, we would have saw tensions mounting in the Middle East. That seems to have pulled back a little bit. Oil just isn't doing what we expected it to do, considering what's happening in the Middle East. And I'm wondering if there's other news, other factors that are determining the oil price more than what we could be seeing happening in that part of the world.
Well, the oil market has become less volatile because of the influence and the control that the OPEC bloc has over the oil price. So in as much as Middle East tensions are likely to cause oil prices to increase and all of that, we have to look at things like demand. Chinese demand is a big component of of global oil demand as a whole. But at the same time, supply is another side of it. If you think back to the oil price crash of April of 2020 in the pandemic, oil futures crashing to below zero, effectively hitting negative for the first time in a very long time, those sorts of conditions and those sorts of variables are not likely to be at play again, because the OPEC bloc has a very clear handle and control over what's happening. They can reduce supply, they can increase supply, they can manage that. And to the OPEC bloc's credit, they've been doing it with the Russia tensions that have unfolded, and now with the Iranian tensions. So until the OPEC bloc says, you know what, we're concerned that we're not going to be able to meet supply, I think it's highly unlikely that you're going to find an oil market that is struggling for supply. If anything, they've been cutting back. There have been oil cuts that have been announced on the regular by the OPEC bloc. So I just think that that element of stability that they're providing into the market to say, amid all of the Middle East tensions, we still have supply under control. That's giving the market a sense of calm to say, yes, there can be tensions that are ongoing and developing, and if those tensions do escalate, we will have to then wait and see how significant that escalation is. But if the conditions remain the same at the moment, then supply doesn't seem to be adversely affected.
All right, well, brings cover to me too, Jimmy. Must be honest, I'm keen to get your stock pick, but first I'd like us to reflect on counters that have found favor with your industry peers.
My stock pick today is Sanlam. Sanlam has been showing great growth, and the acquisitions that they've been doing over the past year have been great, especially if you look at the Indian acquisition and buying interest in that business. I think that's going to be good for the business going forward, and that's why it's my stock pick today.
So I'll go with SLB. So it used to be Schlumberger. It was an oil services company in the, I suppose it's multinational. So it's all over the place. It does essentially oil field services. And I think, if you look at the big energy stocks, so the likes of Chevron, ExxonMobil, BP, Shell, a lot of them have moved up quite aggressively with the rising oil prices just around the Middle East. Now, people, I think, have maybe underappreciated what it's now called SLB does. It's an absolute stalwart in the industry, but they look at it and say, oh, it's potentially maybe think that the higher oil price is not going to feed into, essentially, drilling more wells and all the oil services that they provide. So it hasn't kind of had the same run up that you've seen in a lot of the other stocks. So the fact is, however, that, again, if you think that oil is not going to be something that is consumed in the near future, this is probably not the stock for you. Okay. But our view is that around ESG and all of that, the opinion swings faster than the actual real demand. So what happens is people stop investing, there's a shortage, and you actually see price spikes. And this you can see throughout history. And then eventually the demand will reduce as we move to more greener technology. We don't have trucks, we have hydrogen-powered trucks, or we have battery technology in all our cars. Now, that delay, that lag, generally results in a price spike. That should result in a profit spike for SLB as well. Something that I think you could potentially add to portfolios at this stage, even with the higher oil prices.
All right, Jimmy, keen to get your thoughts on some of those. Sanlam and Schlumberger Limited.
Sanlam, well, I can sort of see the rationale behind the Indian acquisition. I think for me, I don't like the price that Sanlam's at the moment. At 65 Rand, we've bounced off of that 75 Rand high, which we weren't able to break in 2022. We haven't been able to break in 2024. So it almost looks like a bit of a double top at 75 Rand a share there. And I still think that if we break below 65 Rand a share, there's a real possibility we come down to 55 Rand a share. Oh. So I'd rather wait a little on that one. SLB, as Gary pointed out, I think I can see the timing and the price point at the moment, sitting just around 49, I think it's $49 there, if not 49 euros, if I'm not mistaken. So it's just come off of just under 60, so that's not a bad pricing at that point as well. And as you mentioned earlier, I think I agree with the fact that if we look at some of the stocks that have run hot, similar to how you look at the AI stocks that have run hot, there are some that have been lagging behind because of the fact that it's not a direct correlation with that particular sector. But SLB I'd be considering. And with that said, which stock are you loving on this Monday afternoon? There's so many. There's so many.
You literally say
They
this
are-
every time.
No, but the thing is, and they're looking good, right? So certain stocks are looking better and better, and it starts to look like a sector that you want exposure to.
got you.
So if you're looking at a telecoms sector, right, MTN bouncing off of 80 Rand is a nice level. They've still got everything up in the air to deal with and all of that. But my picks, I'll give you two, a local and a foreign pick.
Okay.
Local pick, Discovery. I'm liking it all the way down to 100 Rand. It's at about 109, 110 Rand a share at the moment. Offshore pick, Snowflake. They recently changed CEOs. They reported quarterly results in January. They haven't yet broken profits. They're back on the right track. The new CEO went and spent $5 million in acquiring shares as well, and he bought in at around $159. The share's at about $145. I can still see it coming potentially down to, say, $130 if we do see that happen. I don't know if that's likely to happen. We've got earnings from them coming out in May, I think the 22nd of May. They'll report this last quarter's earnings that wraps up today. So I'd be interested to see what happens there. But those are the two picks I'm liking.
Brilliant. Always a pleasure having you with us, Jimmy. An absolute pleasure. That was your midday markets update with independent analyst Jimmy Moyaha.